students, welcome to the lecture series on financial management. Today in this lecture, we shall cover the topic working capital management. Under this lecture, we shall learn the computational aspect of various topics related to working capital, that is computation of working capital by estimating current assets and current liabilities and the computation of operating cycle. The objective of this lecture is to understand the conceptual framework of working capital management. We shall learn how to compute the operating cycle using the defined formulas and to ascertain the number of days of the operating cycle. We shall also learn how many times operating cycle will be run in a year. And we shall learn the estimate of working capital by estimating current assets and estimating the current liabilities using the formulas, so that we can ascertain the exact amount of working capital required. This computation shall be based on average basis. It shall never be computed on Now students, first of all we will learn how to compute the operating cycle. In our previous lectures, we have learned the concept of operating cycle and the length of operating cycle to be computed under trading concern and manufacturing concern. Using those formulas which we have learned in the previous lecture, we shall compute the operating cycle. And we shall also compute how many operating cycles are to be run in a year. Now let's see this practical example on the screen. The figures for raw material, work in progress, finished goods are given, as well as the average raw material, average work in progress and average finished goods are given. So we have to ascertain the period, that is average storage period of raw material, average work in progress holding period, average finished goods holding period, and also the credit allowed to the debtors. Fortunately, this is given in the question that credit allowed to the debtors is 45 days, and the credit period which we have received from the suppliers is also given as 30 days. So let's start doing the computation. First of all, the figure given is raw material consumed during the year 6 lakhs. Then the figure given is average stock of raw material 50,000. Third one is work in progress inventory 5 lakh. Then finished goods are given as 8 lakhs and average work in progress inventory is as 30,000 and average finished goods held in stock is 40,000. So first of all, we know that gross operating cycle is equal to R plus W plus F plus D. Then we have to subtract C from it, so we get the net working capital. So first of all, we will compute R. R means raw material storage period. Now students, first of all we will compute R by the formula given, that is average stock of raw material divided by average cost of raw material consumed per day. So average raw material consumed per day shall be computed as raw material consumed during the year divided by number of days. We will assume number of days to be 360. Answer will come as 6 lakh divided by 360 is equal to 1667. So the denominator will be 1667 and the numerator will be 50,000 because average stock of raw material is 50,000. We will divide it as 50,000 divided by 1667. It will give us the storage period of raw material as 30 days. Now we have to compute W. W means work in progress holding period. It will be computed using the formula average work in progress stock divided by average work in progress stock per day, or we can say cost of goods produced per day. So again here we have to find out the denominator in the days, because the question has given us the information of work in progress inventory, or we can say cost of goods produced inventory in a year, that is yearly figure is given. So we will divide it like this, 5 lakh divided by 360 it will give us the figure of 1388. So, putting the figure of 1388 in the denominator and the numerator to be 30,000 as given in the question, we will find out holding period of work in progress. So, it will be 30,000 divided by 1388 is equal to 22 days. So, work in progress holding period is coming to be 22 days. Third one is F. F denotes finished goods storage period. Let us see its formula first. Average stock of finished goods divided by average cost of goods produced per day. So, again we have to take the figure of year and then divide it by 360 to get the per day figure. So, 8 lakhs is given as the figure of finished goods per year. So, we have to divide it by 360, we will getting 2222, that is 2222. So, keeping the figures in the formula, that is average stock of finished goods 40,000 divided by 2222, it will give us the figure as 18 days, and debtors collection period is already known to us. So, it is 45 days. Adding 30, 22, 18 and 45, we are getting the entire amount as 115 days. This 115 days is the gross operating cycle period. Now, we know that from gross operating cycle, we have to subtract C. C means the credit period which is given by the suppliers to us, and we know that this period is 30 days. So, 115 minus 30 days will give us the net operating cycle period as 85. Now, this 85 is showing us the figure of net operating cycle. Now, we have to find out how many times this operating cycle has to run. So, there is a formula, that is number of days in a year divided by net operating cycle in days, which we have computed as 85. So, the answer will be 360 divided by 85. It will give us the figure of 4.2 days. With this, we have learned the method of computation of operating cycle and the number of operating cycles which will run in a year. Now, student, we will learn the method of estimating the working capital by estimating the current assets and current liabilities. We know that working capital is excess of current assets over current liabilities, and we have to do this estimation on an average basis. So, we need to follow a format to compute the net working capital. So, first of all, in step 1, we have to compute current assets on estimated basis, and this all calculations will be based on cash cost basis. Cash cost basis means that we will consider only relevant cash inflows and outflows. So, let us see this format. First one is estimation of current assets, then estimation of current liabilities, then we have to subtract current assets from current liabilities. So, excess of current assets over current liabilities will give us the figure of working capital. We will say that this is net working capital. Now, we have to load the safety margin on it. The safety margin will be a percentage on working capital. Either it can be before adding the safety margin or after adding of the safety margin. Before and after will impact the calculations. Next one will be after adding of the safety margin to the net working capital, we will compute the total working capital. So, just summarize it: current assets on estimated basis minus current liabilities on estimated basis, we are getting net working capital. Then we have to add the safety margin on a specific percentage as suggested by the management, and then we will get the total working capital. Now step by step we have to find out each segment, that is estimated current assets we have to find out using the suitable formulas as have been drafted. So let us see how it goes on. Now students, let us learn the computation of current assets on estimated basis. Again we have to find out the estimation of inventories, then cash and other expenses, that is prepaid expenses, whether it is factory overheads, administration and selling and distribution. We know that inventories have three parts. First is raw material, second is work in progress and third is finished goods. So for each of these elements we have to find out the estimated current assets or the requirement of these inventories in a estimated manner. So let us see the computation of raw material. See this formula on the screen. Estimated annual cost of raw material to be consumed, divide by either 12 months or 365 days, then multiply by average raw material holding period. Similarly, stock of work in progress is to be computed using the formula, which is estimated annual cost of goods to be produced, divide by 12 months or 365 days into average work in progress holding period. We have to use 12 months or 365 days. It will depend upon the holding period as given to us in the information. Next is stock of finished goods. It will be computed as estimated annual cost of credit sales divide by 12 months or 365 days into average finished goods holding period. Cash in hand shall be as per the minimum requirement decided by the management policy. Then we have to add up prepaid expenses, prepaid administration expenses and selling and distribution expenses. So stock of raw material, work in progress, finished goods, cash in hand and prepaid expenses shall form the value of total current assets. Now students, we have to work out the method of computing this raw material with the help of example. Let's see this example on your screen. Stock of raw material has to be computed. The budgeted production is given as 60,000 units. Raw material cost per unit is 5 rupees and raw material storage period is 2 months. So the solution will be stock of raw material is equal to 60,000 into 5 divided by 12 into 2 months. It will give us the figure of rupees 50,000. Now what is this 60,000 into 5? 60,000 is the units and 5 is the unit price of 1 unit. So 60,000 into 5 will give us the total value of annual cost of raw material. So it's annual, we need to divide it by 12 and then we have to multiply it with the storage period, that is 2 months, because months is given in the question. So we have to divide the entire estimated annual cost of raw material by 12. So in this way stock of raw material is computed as rupees 50,000. Now there is a little variation in this example. Now what is given is budgeted production to be 12,000 units, while raw material required to be produced for 1 unit is 2.5 kg. Raw material cost per kg is rupees 4 and raw material storage period is same as 2 months. So first of all we have to find out the consumption in kgs. Here 12,000 into 2.5 will give us the figure of 30,000 kgs. So we have to find out the estimated annual raw material. So it will be 30,000 kgs into rupees 4. So the annual raw material cost is 1,20,000 we need to divide it by 12. So, it will give us the figure of 10,000. Now, we need to multiply this 10,000 by average raw material storage period, which is given as 2 months. So, the final figure will be 20,000. So, this way we have computed the estimated requirement of raw material using this formula. Now students, let's learn the computation of estimated work in progress. So let's see the formula on the screen. It is estimated annual cost of goods produced divided by 12 months or 365 days into average work in progress holding period. We will learn this computation with the help of a example. See this example on the screen. Activity level is 60,000 units. Raw material, wages, manufacturing expenses and all the relevant data of cost is given in the per unit. So raw material is equal to rupees 5, wages rupees 4, manufacturing expenses including depreciation of 1 rupees, 3 rupees, administration overhead expenses as 1 rupees and selling and distribution expenses to be 2 rupees. The production cycle is half months. Now we have to do the solution. First of all, keep in mind that we have to estimate everything on cost basis. So depreciation of 1 rupees which is included in the manufacturing expenses have to be ignored. That means instead of 3 rupees we have to take rupees 2 in finalizing the cost of goods to be produced. So let's see this working. First of all, units of work in progress. They are given as 60,000 as yearly. So divided by 12, we will get the figure as 5,000. Now the production cycle is half. So we have to do the half of the 5,000. So computed, it will give us the figure of 2,500 units. Now find out the calculation of work in progress. Raw material is 2,500 into 5 and the degree of completion will be taken as 100%. Because this is the most crucial point I am going to discuss here, inventory under work in progress shall be considered to be provided in the beginning of the year, while the expenses related to wages and other manufacturing expenses will be considered to be spread evenly throughout the year. So, the degree of completion for wages and expenses shall be taken as 50% under work in progress inventory. So, let us see further how the wages are being computed. Wages will be 2,500 units into 4 rupees into 50%, because we have assumed that the expenses are evenly spread throughout the year. So, it will be coming as 5,000. Then manufacturing and overhead expenses to be 2,500 into 2 into 50%. So, it will give us the figure of 2,500. We have taken 2 because we already know that depreciation is to be ignored. So, rather than 3, we have to multiply by 2 and the degree of completion will be 50%. So, 12,500 plus 5,000 plus 2,500, they will give us the figure as 20,000. So, work in progress inventory is coming to be 20,000. Now, students, let us discuss some very important formulas for computation of work in progress. They are related to the physical units. If physical units of work in progress are given, how to compute it, and if physical units are not given, then how to proceed ahead. So, let us see these formulas on the screen. Raw material, annual cost of raw material to be consumed divided by 12 months into process period into degree of completion. Then wages, annual wages divided by 12 months into process period into degree of completion. And manufacturing overheads, annual manufacturing overhead divided by 12 months into process period into degree of completion. So raw material, wages and overheads, they will give us the figure of work in progress stock where physical units are not known to us or not given to us. Now how the calculation will differ if the physical units are given to us? Let us see the formulas for all the 3 units, that is raw material, wages and overheads. Raw material is equal to work in progress in units into degree of completion into raw material cost per unit. Similarly, wages, work in progress units into degree of completion into labor cost per unit. Manufacturing overheads, work in progress per unit into degree of completion into manufacturing overheads per unit. So, they will give us the figure of work in progress stock. So, these formulas we need to keep in mind, and the degree of completion will be, if nothing is given, we will assume that raw material is issued in the beginning of the year. So, 100% degree of completion will be applied and wages and overheads will be assumed to be distributed evenly throughout the year. So, we will take the percentage of completion as 50%, and in certain questions these degree of completion can be defined, that is 80% of the raw material is used and 60% wages or 40% overheads. So, as per the information given in the question, we have to use the degree of completion. If nothing given, then 100% and 50% can be taken as the percentage of degree of completion. Now students, we will learn the another dimension of computing current assets, that is we have to compute the debtors amount. The formula is cost of credit sales divided by 12 months or 365 days into average collection period. Let us see the practical example on the screen. Level of activities is 60,000 units annually. Raw material and all other information is given in per unit. So, raw material is 5 rupees per unit, wage is 4 rupees per unit, manufacturing overheads 3 rupees per unit including 1 rupees of depreciation, administrative expenses 1 rupees, selling and distribution expenses 2 rupees, profit is 5 rupees and selling price is coming as 20. Credit period allowed to debtors is 2 months, cash sales 20%. So, we have to compute the amount of debtors. So, we have to go step by step. First of all, we have to find out the cost of sales on cash basis. So, it will be 5 plus 4 plus 2 plus 1 plus 2, that is 14 rupees. Again the depreciation is excluded. So, it is in per unit. Second step is total cost of sales. It will be 60,000 units into 14 rupees. So, amount will be rupees 8,40,000. Now, we have to find out the credit sales. It will be 80% of 8,40,000 because 80% rate is given in the question. So, it is coming as 6,72,000. Now, we have both the things, credit sales and the debtors collection period. It is 2 months and credit sales annually is 6,72,000. So, dividing 6,72,000 by 12 and multiplying it by the collection period, we can get the estimated debtors. So, it is coming as 6,72,000 divided by 12 into 2 is equal to rupees 1,12,000. So, with this we have learned how to compute debtors. Till now we have learned to compute the inventories, all the 3 segments of inventories, that is raw material, work in progress and finished goods. Then we have learned to compute debtors, and now the question comes about cash in hand. Cash in hand's minimum requirement will be decided by the management. With this we have learned to compute the current assets on the estimated basis to find out working capital. Thank you.